Good afternoon. My name is Chris Rhines. I'm a mortgage banker in Dayton, Ohio, and every week I put out a video that tries to help consumers understand the process of purchasing a home in today's market. And today specifically, I'm going to be discussing how you buy a home after you have filed and went through the process of Chapter 7 bankruptcy. The difference, there's two types of bankruptcies. There's a Chapter 13, which is a realignment of debt. That's where you negotiate your debts to a lower amount and you pay a monthly payment to the courts until that debt is paid off. Generally, that takes 3 to 7 years to complete a Chapter 13. That's not what we're discussing today. Today we're discussing Chapter 7. Chapter 7 is where you essentially wipe out the complete debt with no repayment. Now there's two dates associated with a Chapter 7 bankruptcy that are key. One is your file date. That is the date in which your attorney has filed the paperwork with the courts to petition to have those debts relieved. And then usually within 3 to 4 months after that date, you receive a discharge date. And that is the date that's most important as it relates to mortgage loans. So once you have that discharge date, you become eligible for a mortgage. And there's different time frames for the different types of loans. The two loans that allow you to purchase a home the soonest after Chapter 7 is FHA, which is the Federal Housing Administration, and VA, Veterans Administration. Those two loans allow you to begin applying for a home loan 2 years after your discharge date. So those would be the two options if you're looking to buy a home as quickly as possible. Now, everyone's generally eligible for FHA. VA, you do have to have VA eligibility through the military or prior service. The next type of loan that becomes available, and this is after a 3-year period from your discharge date, is a USDA loan. United States Department of Agriculture, also known as Rural Development. And their rule on this is 3 years. So after 3 years, you become eligible for that. Now, what most people are most familiar with are what you would call a conventional loan. On a conventional loan, the time frame in which you become eligible is 4 years. Okay, so those are the 4 primary types of loans, and you become eligible as soon as 2 years. And with conventional, it is going to take as long as 4 years before you can start applying for a home loan and buy your home. Now, just the discharge date is not necessarily the only thing you need to consider. The number one thing that is required after you have filed a Chapter 7, it's very important that you establish some reestablished credit. So things like credit cards, car loans, personal loans, student loans, it's absolutely critical that any debt that you have after your Chapter 7 bankruptcy, that you make those payments on time, on or prior to the due date. Now, it's also important that you try to get as many of those reestablished trade lines as possible. We like to see 3. So let's say you have 2 credit cards and 1 car loan. That would be an ideal situation to where you've been able to reestablish 3 types of credit with a credit history. The other thing that goes along with that we also want to see that you've had those accounts for at least 12 months with a perfect payment history. So if you do the math, if you want to become eligible 2 years after your bankruptcy date, it's important that right about 1 year after your bankruptcy is discharged, you start applying for these credit cards, student loans, car loans, any type of loans that's going to help you reestablish that. Now, it's also important that you make sure when you take those debts out that you are 100% confident those creditors will be reporting that debt to your credit bureau. You have to be careful. There are some companies out there that will extend credit to you, but they don't report that to the credit reporting agency. And when that happens, it really doesn't do anything good to reestablish your credit. So just inquire with those creditors, get it in writing, and just make sure that's done. Now, the credit cards. Let's talk about the use of those credit cards. It's very, very important. When you have these credit cards, make sure that you never ever use more than 50% of the available credit. So, for instance, if you are given a new credit card and that credit card has a limit of $500 a month, $500 total available credit, you want to make sure you never have more than $250 at any time as an outstanding balance, okay? When you keep that available credit at 50% or you have less than 50% used, that fares well on your credit score. Now, the other thing that goes with that is, again, make sure that those payments are on or before the due date. These credit card companies, even though you have a grace period, if you make those payments one day after the due date, they have the right to increase your interest rate, and obviously you wouldn't want that to happen. Now, there are 3 companies that I'm aware of that help folks that have gone through a recent Chapter 13 or Chapter 7 that are willing to extend credit to you even though you have maybe just come out of a bankruptcy. And at the end of the video, I will have them scrolled so you can write them down, but verbally I'll give them to you. One is Capital One, and you can go to CapitalOne.com. They have a credit card available there for people that are trying to reestablish credit. Another bank that's doing that is Orchard Bank, or OrchardBank.com. You may want to try there. The other one is CreditOne.com or Credit One Bank. And again, I will scroll those to you after the video here. The next thing that comes to mind is most people after a Chapter 7, typically they're going to be renting. And it's important that if you are going to rent, make sure that your rent payments every month, that you pay that through a checking account or you have that automatically taken out of your checking account. There are folks that I run into, and it becomes a huge issue that they pay their landlord cash, and the landlord gave them some type of a receipt. But the problem with that is we can't verify that. We can't verify that cash actually took place. We can't verify anything with a receipt. And if you do not have canceled checks or 12 months bank statements showing that your last 12 months were paid through your checking account, it becomes unverifiable. And along with the bankruptcy, there's a chance that we're not going to be able to help you until you have those 12 months. So make sure that that's done. Also, too, I've ran across this occasionally, but a landlord or a renter will call their landlord and say, hey, the sink needs fixed, it's leaking, some carpet needs to be replaced, and the landlord will say, hey, if you want to go ahead and take care of that repair, give me the receipt and I'll knock that amount off of your rent. So if you're paying $1,000 a month and you paid $500 to repair something in that house, and the landlord said, hey, just knocked it off your rent, send me $500 for your rent. So when you apply for a mortgage and we're looking for $1,000 a month, 12 months in a row, and there's one of these months that has $500 as rent, to us, that's an incomplete payment. So don't get tied up in that. Explain to your landlord that you're going to have to make the full payment, and at a later date, if he wants to pay you back that $500, that's the way you're going to have to do it. So hopefully you have a good relationship with your landlord. Now, we talked about a lot of things today, and these are just the basics. There's a lot of other things that go along with qualifying for a mortgage. In addition to your credit, your discharge date, the reestablished credit, your rent, we also are going to need to look at things like your income. We need to look at your assets, what type of money you have to put down. Typically, on the FHA loan, which is the loan that you become eligible for within 2 years, you're going to need 3.5% down payment. So on a $100,000 purchase price, that's about $3,500. So you need to have that saved. Now you can get a gift from a parent, that's allowed, but just know that you're probably looking at 3.5% minimum, before you can get into that house. So that pretty much wraps up this series. And these again are the basic guidelines. And please remember that this is a very changing environment that we live in today, and some of these guidelines may become a little more strict, some may become a little more, maybe easier or looser. So you definitely want to keep in touch with myself. I make myself available. I have a website, email address, my phone number, and again, at the end of this video, we're going to scroll all that contact information, and please feel free to call me, even though you might be 2, 3, 4 years out before you can purchase a home. I'd love to help you. That's the role I play, and